Welcome everyone to the Kindle Report. It is Tuesday night, and yeah, I see. Just looking through some of the comments, and boy, a couple of days gets you guys pretty negative. Be really careful getting too bearish here. And there's still, like I've been talking about, and folks are making. I see some puns about my choppy. Choppy to me is 3750 to 4,000, 4,100. That's choppy to me. And there's no new trends coming as we speak right now. And I'll go through a lot of these details tonight. The one thing that you need to think about, if you think next week they're not going to bump this market back up, that Jay Powell's not going to say something just a little cute, I think you'd be surprised. So I named this video, Getting Ready for the Next Fed Pump. And right as it gets all you really negative and bragging is right when you get caught again. I'm not long or short right now. Matter of fact, I don't. It's interesting when I see comments about, Bob's bullish. The long-term forecast I went through a couple nights ago is still valid. We got, lots of buys for Monday morning. This is now day 2 of 200. So call me in 200 days and we'll see how things are going at that point in time. So like I said, a database on intermediate has kicked in over 42%. Go through the details here in a few minutes. We're seeing that liquidation in the short-term models that I've been talking about setting up for the last probably 5 or 6 days. I'll go through those also here in a few minutes. But make no mistake, I think the Fed's quite happy with just a couple of days, because if you look at what's going on in the markets right now, it's not really driven by anything in recession fears. That's about every story you're going to see, recession fears. Well, where were those fears last week, 3 weeks ago? This is just a dialogue which to once again get some folks caught in the market, and you have to wonder why the VIX isn't expanding, right? What's going on there? So there might be a message in there. Folks are going that's like an issue. No, it's what it is. VIX is about volatility, not necessarily about market direction, but it does help with market direction often. So just looking at a couple things that we've got. Tomorrow's coming out. We didn't really have any real economic information coming out, but as I've been talking about, what is coming out is being better than expected, even in Germany and a lot of markets. Everybody's got these really super negative numbers. They're not really coming out to play. So yesterday, 1.44% down on the S&P, NASDAQ down 2.0, Russell down 1.5. And those were big numbers, and they printed them down. They traded down into some of the numbers that I talked about yesterday, down toward 37.60, 37.40. Said I thought if we got through S1 last night, we would trade down into S2. Well, we went all the way to STX again. So plenty of volatility, and they're pushing them. We got a pretty decent bid to come back because we traded down in the 23 handle right now. Futures 51.25, close to the high of the overnight session at the moment. But the NASDAQ down 2, like I said, Russell down 1.5. Little moderation. On Monday, the Russell was the weakest. We also saw 10 of the 11 sectors down yesterday, and energy leading the way, 2.7% there. And once again, this 10-year printing 151. It's pretty amazing. I look at this number here just to see it printing there. And I've been talking about the 140 handle on this, and I'll go through all the details here on the interest rates here in just a few minutes. But this is just I know folks are, I guess, because we're down 2 days, and these are big down days. And I've been talking about 2 to 3 days down and probably a recovery toward the end of the week. So, we're midweek. We're halftime here during the week. So we'll see how everything starts to play out. So let's talk a little bit. Tomorrow we got mortgage apps coming out. Don't see anything big there. They were down 0.8 last time. Probably not as bad. I'm seeing these numbers starting to improve. Only reason why they're improving is there's nothing going on out there. So they're just not as bad. The activity has slowed down to a point where we're not seeing a lot of things that go on within the mortgage community or the housing sector. It's just slowed down. I mean, we're seeing numbers 35, 45% down in activity in sales volume, just in all the big markets. we're also going to get productivity. And if you recall, a couple months ago, we got one of these huge -4% on productivity. And then all we've been doing is moderating. Expectation is for plus 0.3 tomorrow. Labor cost is expected to stay around 3.5%. And then consumer credit also comes out 26.5 billion. I suspect that number will be up. It's Christmas time, and not sure that number has a lot of effectiveness. One of the things I was looking at is on the futures is this contango that is out there. We're looking at 30 handles. We're about to roll over next week on, I believe it's the 9th. Actually, maybe it's Friday is the rollover for the contract. I guess it is. It's the 9th. I'll verify that here in just a few minutes. But there's a 30 handle premium in the March contract. And if you go out to June, there's no real volume out there. But we're printing a 70 handle premium to the current front market. So we're basically, that's just the interest rates being reflected and cost to carry and people that are borrowing or margining. Everything is more expensive as we're going forward. So I'm just, one of the things I have a note here to myself, which I'll share with you, is if you remember, how many of you can remember in June how negative things were right into the Fed meeting, and we got basically the June lows, and we've seen a couple of these things. I was trying to find out how many times, and maybe you guys can help me, how many times we've had a really super follow negative meeting in the recent history. Let's say this year after the Fed meeting, we got this big continuing decline. There might have been some earlier in the year. It's just not, usually I have a pretty good memory for these kind of things, and I'm not really just bringing up anything right now, but I would be expecting to see the markets firming in. There's something I've been talking to you folks about for the last, I don't know, since maybe the end of November, is what we're really coming into is a time of the year where it's very erratic, and there's a lot of cross currents going to come in. There's big institutions that need to rebalance their portfolios and mutual fund players. Everybody wants to get ready for 23. So, and you're going to see these, and I talked about this last night, you're going to get all these big tranches. Everybody's selling, then everybody's buying. Just flip back to, last week when Paul was speaking last Wednesday, look at that 3% rally. So it took us 2 days to go down. This is kind of an indication to me a lot of times, is we did a 3% rally in 1 day, and now it's taken us 2 days to go down about 3.5%. And we're seeing a moderate rebound. Like I said, right now, E-mini's up 625, printing 35.51. I think they're, like I said, it's pretty close to the high of the session. Just going through my notes here, just looking across everything here. And I'm just, like I said, I think we're trading down into this support level once again. And a lot of folks are going to argue that maybe we got rejected off the 200. The easiest trade out there is probably to be short. And, I just still think what I'm seeing in the algos, and especially on the weekly algos, there's still a couple more weeks of stability to stay in this choppy range. And we're sitting here, folks, we're at the 6th. We're basically, the 13th and 14th is the Fed meeting. We're coming in next week. Once that's behind us, it's going to be all window dressing and a lot of other currents in here. And probably not a thing's going to change between now and after the Fed meeting. And, you just never know. Powell has a way of slipping a couple words in. The algos pick up and off to the races. So be cautious around here. Like I said, I don't really have any strong feelings in either direction. I'm still looking at, right now, the support's around 39.40. We printed down to 21, I think. And on the basis of the futures, we're looking at that being probably the bottom end of this range. We could go as low, and I discussed this last night. I'll go through the details here just a minute when we go through the technicals. But we could trade down to the 40-period moving average, which is down in the 38 handle. That's very possible. And I'll cover that here in just a few minutes. So let's go ahead and take a look at the database. And just like last night, I think that it's not going to take a full hour to get through the content tonight. I just don't see that happening at all. I think it's going to go pretty quick. So let's go ahead and get into the database. All right, so we did see some selling. I was talking to you about that chart where we get to the peak value in the database, and we got up to about 82, almost 83%, and then we're going to see a decline. I talked about this last night. We should go to 62 to 58%. We're down to 73. We dropped about 6 points on tonight. We had 3,347 sell signals, and we're looking at 109 buy signals right now. So major negative rotation, but this is taking profits in a lot of these trades. There's been some monster trades that are getting unwound right now, and that is definitely looking at what the this database is doing from the standpoint. And I guess the expectations here for the database on a short-term basis, I just laid out. Look for it to continue to see selling over the next several days, and then we'll start to stabilize and probably get another rotation as we get a little closer to year end. I know I show you this chart every night. Your folks are probably getting tired of it, but I do want to bring it up just one last time here. Maybe not a last time, but it's becoming, just because I want folks to understand exactly what is going on here from this standpoint, is this chart illustrates how the database works. So we popped from 35 to 48%. And then it will probably see some consolidation, like I said, coming into year end. I don't see any big rallies or anything like that coming. Really just a sideways chop from the standpoint of this range that we're in. So right now, 3,900 should hold. I'll go through technicals here in just a minute. We could trade down into a 38 handle, and then we should see just a lot of sideways choppiness. And this has been the same pattern that we've been in for a while. So let's go ahead and get into the S&P. All right, so the S&P is set up at, I believe I'm just clicking on this, Friday the 9th is the rollover for the contract. So we're definitely going to roll over, and all of a sudden, guess what's going to happen on the near futures contract? It's going to be 30 handles higher just because of the rollover. And so if you go to the March contract without the rollover, it's going to look a little different. If you use the nearest futures, which I do, then that's all of a sudden this chart's going to look a lot better. What we're seeing here on the algos is this is what I talked about last night. We were expecting a down day. I thought maybe we would hold an S2 value. But as we look at the values from yesterday, S2 was 66. That was one of the targets. So if we get through that, we'll go down to 46. Well, 29 was STX. So we went all the way down. And what this market grid represents is the range of expectations that is normal. And I've told you this before, we only get about 12% of the time we get a breakout outside the bounds of this market grid on any basis, even if it was on a 5-minute chart, a little more on the short-term charts, especially on high volatility days. But the bottom line is that what we're really seeing here is this market coming down. We're now down below the 10 and 21 period moving averages. I'll bring something up here in a minute before I leave the S&P, but the algos are suggesting another day or two, and then more weakness as we come into potentially on Thursday. But this is the key here, folks, is this PPM3 is staying stable at trend level, and that value right now is 38.76. It's going up about 10 handles per day, so it'll be 86.96. We're going to be in 2 days. By the time we come into Friday, we're going to be printing a 3,900 on that, and if the algos are right, we're going to maintain that upward slope. So that's going to be the major support. And we've already printed 39.21. It doesn't even have to go down from that standpoint. And, and a lot of times I see somebody's asking about going to be tax loss selling. That's what you might have already seen. That's the kind of stuff that is going to happen in the month of December. And it doesn't have to happen on the last day. It could happen in the last 2 days. And then all of a sudden you get a bunch of that out. And then that's the choppy pattern. So, I know it's kind of interesting because if you look at this range here on this chart that I have up right now, if you look, the low here was 37.51 on the extreme. And if you look, let's just go a little tighter here. If we go back just the last couple of weeks, 38.25 low, and we printed up to 41.10. And now we're just coming back down again. So those of you that want to, troll and be smartasses about the choppy range, that's what we're in. If it breaks down from here, then there's more. But we could go, like I said, toward this 40-period moving average, and right now that value at the moment is right at 38.76. So that's below the 39 handle. I would be a big buyer if they printed that thing down to that level. But for a trade, not for all-time new highs. Please don't. I always try to make myself very clear when I'm talking about stuff. I am not super bullish. In fact, let me bring something up here just real quick, and I want to show you something. I'm going to bring up the E-minis, and we got an exit on the open of that. Remember that trade I was telling you about? This is it. I'll show you. It says buy one, 37.71. Well, yesterday it sold at 39.44. So it sold on the open yesterday. The open was 39.44.75. So this is what I was trying to tell you. The trade that if you wanted to say I was bullish, yes, I was on 10.24. Not yesterday. And matter of fact, we were exiting. I was talking about this trade getting exited, and we were going to go neutral. So we're neutral on the models right now on a short-term basis. Intermediate has a little bit bigger outlook that I've been talking about from that standpoint. I want to go over, because this has been becoming a feature, and I was doing this when I was doing the morning shows, but I think that I want to cover this here. And this is the 1 hour chart. And the hourly chart is suggesting probably as we trade up into the London opening tonight, we should see some relative strength. We should stay above the 10-period moving average. 39.45 is that number. Right now we're trading 52. And let me just look at something here. Let me go over here and let's take a look where we are. Yeah, so 53 was the high here, 35.53. That was the high. So we're printing now 51. So we're backing off of those highs just a little bit. But this hourly chart is suggesting that we're going to see the markets trade up here into this. It says that on an hourly basis now is in the next, let me just get you a count. Yeah, 4 hours, which is basically the London Open. We're going to see strength into London Open, then it's going to stabilize, and we're just going to kind of stay probably above the 10-period moving average. Now it's suggesting it's going to get up into a 0.39. Anything over 0.25 is a trend mode. So if you're trading and you're overnight or you're coming in off the London Open, use that 10 simple 10 as a number. So there's no way to measure where it's going to be right now, other than the fact that it's at 39.45, and it looks like it's going to actually turn up from the point where we are right now. So let's go to. I think that covers that. Let's go ahead and review the NASDAQ. I think we'll be able to fly through this. A little bit more to talk about when we get to the 10-year notes tonight. All right, so as we go, like I said, the futures rollover is on the 9th, and so similar type configuration, not as bearish. It's trying to just maintain this flat 10-period moving average. The 21 is going to maintain for trend mode. We're trading below it, which is 11,686. Last trade 11,590. I would expect to get above that. I'll bring up the hourly chart on the NASDAQ as well here in just a minute. Same scenario where the 40 is likely to stay fairly stable here. And on the, we look at, the algo is just saying we're going to stay just about at trend mode. That number is 11,445. That's going to be your extreme support. We break through that, then it's not over, but we'll definitely see something more substantially. And I don't think that we're going to get, like I said, I think we're going to hold in these areas here. Got to watch it. The market tells you what's good and what's not, and that's what I do here is I look and see what's going on. And when it comes to trading and everything, I can tell you when they printed down below STX yesterday, that was a buy. And there was a nice trade off of those levels. And so, just know that this is probably the best traders market that we've seen for a while with this volatility. Today was a very big day for me. So I just want you to know that these things are just, it's trading. It's not trend following. Even the trend following mode got out. So when it, like I said, 37.71 to 3,900. So I made a couple hundred points and took, I don't know, almost 40 trading days. So it was just a grinder from that standpoint. But let's go ahead and take a quick look at the hourly chart here. I've got, this is the S&P. Let me switch it over. So similar situation, strength about 3 to 4 hours. Everything's stable. We should get up to about the 21 period moving average on the hourly, simple 21 at 11,685. That's similar to that 21 period moving average we were just talking about. And we're currently trading 593. So that's a pretty decent rally from here. And this is likely to unfold at least coming into the London Open. Now, remember this PPM, the 21 period moving average is declining. So the value where it's at right now, it is, I'm just trying to get an estimate. It's going down about 10 handles per hour. So in 4 hours, it's going to be 40 handles. So we could be right here at, I'm just trying to estimate here off the, so we could be at 11,000, we'll call it 620-ish, something like that. So that will be your resistance. And depending on what is happening with the PPM2 here is going to tell you whether we're going to be able to trade through this level or not. So so we're looking at, like I said, some upward bias for the next couple 2 to 4 hours. We should have slight upward bias, at least a decent bid in the markets. So while I was having so much fun, I managed to not cover the expectations for the market grid. So I'm going to finish this at the end of the Russell. I'll go through and I'll go back and bring up the different market grids for the day and give you the best estimate I can of what to watch for. I apologize. I just realized that I did not do that. So I'll still do that before we get through this. So interesting. This is still the hourly, same scenario there. Let's come over here and go to the daily. And I will cover the Russell once I get through the basic analysis. Russell said we should stabilize. We're already trading the 40. This has been going on for a while. You folks know I've been talking about this, is that we're getting the Russell to be slightly ahead of things from the standpoint of where the technical levels are going to. It got to the 200. It got above the 200 first. It's now back to the 40 first on the dailies, and it looks like we're going to get some stability. I don't see the scenario for the big collapse, and at the moment, I think we're just, there's nothing out there to make it collapse. By the way, no one's going to make any super silly moves ahead of the Fed next week. Like I said, I think we'll start to just see this probably more choppy. There's that word again, guys. More choppy action trading between the 40, maybe up on all these indexes toward that of that. All right, so let's just take a quick look at the market grid for this. S1 1801, last trade 1817, lows 12, 18 high, so pretty narrow range so far overnight here on the RTY. So probably S1, R1 here, we're going to have lower volatility. So I'm going to go through, I'm going back to the S&P here right now. R1 3965, S1 3924, which would be a retest of this. And I hate to throw this in here, folks, at this point because it's out of sequence, but I realize there's been a pattern that's been unfolding, and this will apply to the NASDAQ as well. We tend, after we print down an extreme low like we did today, when we printed down to, what was the value, 21, I believe, 39.21, that will come and almost make a new low, and then it rallies off of that low. And sometimes it's like $1.50 off of the lows, and that is definitely a possibility here. S1 is 24. That would be $3 off of the low. So S1's a strong possibility. If it did break S1, use these numbers as always as a pivot. So our S2 is 39.01. S3 is 39.78. All of a sudden you're printing the 40 with the momentum that we're seeing here and the overall pressure that keeps coming in. Maybe we can sell it down. Maybe this is the big, let's just say the big sell-off of where liquidation and there's a bunch of harvesting of tax losses. Maybe that's what's going on. Anyway, we're just going to have to watch this action. There, as I said, if you look at the algos here, I'm back on the S&P analysis. I know I've commingled this just because I'm missing those numbers, is suggesting that we're not ever going to get into a super big downtrend. And like I said, the 40 is the key here. So look at those numbers. R1, like I said, is 39.65. We printed up to 53.50 so far. Above that, 39.88, 40.11. So I wouldn't be surprised to see a little bit of clawback on these markets after the last couple of days, especially, like I said, the stuff there's nothing really material coming out from a news standpoint. And, maybe I have no idea what would trigger it unless there's something out there that's unknown that could come out of nowhere, maybe trigger some more volatility. But anybody that's sold at 39.21's got to be talking in the mirror when they're looking in there about what's going on. Okay, so let's just do the NASDAQ because I didn't get those numbers, and then we're going straight to the interest rates from here. I apologize for missing those numbers, but I want to make sure you get them. So on the NASDAQ, we're looking at S1 11,491, basically coming in toward that the 40, not quite. The 40's at 11,445. So S2 would be that number. R1, 11,640. We've been to 11,596. So just watch. I would use, just like last night, use R1, S1 as pivots. If we take out S1, expect S2, and then watch the momentum intraday on those hourly charts. But like I said, all the hourly charts here are set up basically looking at the potential for a 3 or 4 hour rally, at least stability into the London Open, and then some weakness to come in. But it doesn't look extreme. But as these, especially on the hourly charts, as they update, the algos are going to recalculate. It's taking, there's an auto regression model in there that's going to take in consideration the new values that actually come in, not the predicted value. So it changes as you go through. But right now, it does look like everything's set for at least stability into the London Open. There's nothing else going on. Why wouldn't that be what happens? I suspect that's the case. But the weakness, it looks like, at least from the moment, doesn't look like it's going to be incredibly weak. And we may just maintain somewhat of a bid overnight into the U.S. Open. So make sure you got the indicators, you know where to get them, kendallreport.com/indicators, and you get in the live room as well. But just if you have these things, they're going to give you some really good direction on how to trade the market off the open in the morning. That's the one thing I do miss from doing the morning shows, is being there for the open. All right, let's get into the interest rates now. All right, so here's the 10-year. I was actually expecting that we might see some upward movement, but guess what? We went right to the 10-period moving average, which is right now down minus 0.85. Major resistance there, 3.64, and the high yesterday, 3.58. We couldn't even get above 3.6, and we got rejected, and all of a sudden, we're at 351. And some of the numbers, I'm going to turn back on the fib ratio. And this is some of the numbers I've been talking about. I know it seems crazy, but this is a new calculation, folks, that is out just tonight, looking for a 200-day moving average on the 10-year. And that would put us at 3.26. Tell me that's not an insane number. What we're seeing happen in the yield curve is just further steepening. If you remember when I went through last week, I'll wait till next week to go through the actual, we get to the Fed meeting, we'll go through the yield curve. But the yield curve is just inverting. It's getting worse by the day. And of course, that's what the inflation, I'm sorry, not the inflation, but the recession fears is coming from. That's exactly where these are coming from. But these new downward objectives, I mean, I just gave you the first one, 3.06 and basically a 293. That's absolute insane number. But we look at the algos, what they're suggesting is that the momentum is going to stay heavy down on these interest rates. There's nowhere to escape right now, so they're going to continue to see these rates going lower. And I had a debate with a friend today trying to figure out what's going on here with these rates and what is the Fed actually trying to achieve. And one of the things that came out of the conversation, I haven't verified it yet, but it doesn't look like the Fed's doing the QT they promised us that they were doing. They're going to unwind 90 In fact, there's an argument that they virtually have done nothing on the QT. So what would that mean? We have lower rates, especially on the back end of the curve. And I don't know how they're going to get out of these mortgage bonds that they're in. It's going to be very interesting because none of the pay down ratios and everything are working like everyone thought they were going to. And I know he watches the channel every night. Thanks, Jim, for the conversation. It was really helpful. It really brought a lot of clarity into some of the things that I've been struggling with. But the bottom line is that these are crazy numbers. I was at 340. This is off a daily chart. So let's go over and put the weekly chart up. And this is the minimum number here is 3. I'm just rounding off 340. It's another 10 basis points. The ultimate downside, though, starts to look similar. The fib target 2 here is at 3%, and that goes to the daily chart we're just looking at. That goes to the fib target 3 on the shorter term chart. So you know how I love clusters of numbers. There's just a whole bunch of stuff, including looking at the algos and the projections here on a weekly basis, that we're going to see all of these moving averages start to roll over, which means we're going to be in a bull market on bonds. Imagine saying that out loud. I won't say it twice, but I'm telling you, that's what's been going on here. There's a crazy bid in the bonds, and they're just continuing to drop. So maybe it's just, maybe it's just some of that shift that's going on and some of that rebalancing that's already starting. The 60-40 guys have had a really tough year, and this has got to feel fairly good, except for the market. The equity markets have kind of changed that outlook in the short term anyway. But the bottom line is, keep talking about, we're printing 350, 351, and I keep talking about 340s, 3.25, 3%. I mean, I just can't believe those are the numbers I'm talking about. And in the live room, I've discussed this a lot, is that I've tried to let my opinions get in the way of the process. And like any of us, we're all human. And when I do that, I have a hard time believing some of these Fibonacci numbers are out there. But we've seen some really crazy events that we didn't think were possible, and they certainly are. And they when I look at these charts, I'm just looking at even the 200 ppm 200 is staying stable, and it's still rising a little bit, but that even looks like it wants to roll over. And this is, somewhere between 5-8 weeks out, looking in the future. Let's go over and just take a quick glance. I do want you to see these charts here on the yield curve, and you'll see what I'm talking about here. Let me get off screen. Is what we're really looking at is all of these spreads are, except for the 13-week. This is the very front one is the short end, but the 5/10s and the 5/30s are just fading. This is a 10/30s. I'm sorry, the 10/30s. The far chart to the right is the 5/10s, and it's just amazing the inversion we're getting. And I'll get this right. It's the 5/30s, and so that's exactly what we're seeing here on all of these yield curves. Are just, and they're inverting big time. And mean recession, probably. We'll just have to see. Like I've said, from the standpoint of the configuration of the markets, I hope I'm making myself really clear. I try hard, folks, and I know folks like to take and make that. Everybody's always, forever and ever, has always wanted me to be bearish or bullish. And I'm reading the data. I would say I'm bullish forward looking because of our database, and that doesn't mean that there's not short-term downside. Typically speaking, folks, if you're a trader or you're doing any kind of trading at all, literally, this is not a joke, probably 85% of the time, every trade you put on will go against you before it goes for you. And why is that? Because no one can get the exact entry point when you're coming into bottoming patterns, whatever it is that drives your process. Hopefully you have one, is you're going to pull the trigger at that. In my case, on the PortfolioXpert and Wavetech, it is programmed to do what it does. And it's got a lot of statistical backup to say there's a validity in those decisions it's making. When it makes 3,000, 4,000 buy signals, it's not going to be wrong 4,000 times, folks. It's going to be, not everything's going to work and not everything's going to hit its targets, but a lot of it does. And like I always try to prevail those institutional clients that are watching. You folks know that I read the database and tell you what the forward-looking ideas are, and we've been through a lot of cycles going back. The first time that database was around where it could be read like I do now was in 1998. So that was a long time, probably before a lot of you were even born. But the point is that this forward-looking stuff is really amazing to watch unfold, because everybody told me in November of 2020 I was wrong, that 21 was going to be a disaster. We're going to make new lows off the 2020. And I'm like, not according to the database. We got well into 78% bullish at one stage in that rally. So, we clicked over 42, and I'm just going to do this every time. So if you're going to watch this channel, when that happens, that's what you're going to hear from me. It's very consistent. And that's why I've had this mantra forever: process over attitude and opinions. And the tagline is, attitudes and opinions keep you in when you should be out, and out when you should be in. So I'm just telling you, you have to have a process and follow it, and make sure whatever you're doing in your trades, I don't care if you're trading options or whatever, make sure there's something that makes a lot of sense. It's just not seat of the pants, because you want to put this stuff together. And I do the best I can to try to articulate what and why I'm seeing what I'm seeing. And am I going to be right all the time? Absolutely not. I've never been right all the time. But I'm going to be right more than I'm wrong. And that's because of the database and everything that I show you on this channel every night. So keep hanging out, folks. We'll see how it goes. So we're going to go to crude oil. We'll hit gold, and then Bitcoin, and we'll call it quits. So as it turns out, I came up to a weekly chart here on crude, and once again, I just went through a little talk about how it's easy to try to blow off some of these numbers. But what's interesting about this is all of these moving averages are rolling over. And as of this week, I mentioned these numbers the other night, and I am saying it out loud, okay? Low target one is $46. So I think it's going to get there? No. But I do think we could get down to these previous Fibonacci targets down around 65, 62. We could print down to the 200-week moving average. But look at these algos. The 200-week moving average is just, it's forecasting just a collapse. And so I'm going to, so this is going to be contrary. You people are going to go nuts when I say this. But when you see a chart like this, I do something I always talk about as reverse fundamentals. So if crude oil is going to go down like this, what's going to happen? One scenario is Joe Biden's going to sell every barrel of SPR that we have. That could happen. 386 million barrels, that could happen. We won't have SPR anymore, but oil prices will be at $46. Or is that there's some catastrophic thing that's just going to roll over the entire economy, and we're going into a monster deflationary process. So I'm not going to go either way at the moment, but I do think there's still downward pressure for the next several weeks here in crude. This is a weekly. I'm not even going to go to dailies. I want to get through the stream tonight. But the bottom line is, when I see these algos looking out, 10, 12 weeks out, it's not necessarily pretty. It does look like, I guess it's good for the economy, but maybe the reason why it's going. Could this be something with this new Russian deal that they just did, that somehow this is going to depress oil prices? I don't know. I think Russia is going to keep selling oil, so maybe what they think is going to get something off the market, it's not going to be. I don't know, folks. I'm way out there right now, but I'm just reading these charts, trying to come up with something that what would make that happen. I'll work on this as we go through the next several days, but this is something that's really big. It's almost like, we're going to go through Bitcoin in a minute, is what we've been seeing on Bitcoin going back probably a month, that it's trying to signal a major decline, and Bitcoin keeps hovering. It trades down to, down to the 15 handle and bounces back. Here we are back at like 17. We're going to go through that in a minute. So let's go ahead and take a look at gold, and we'll be into Bitcoin. All right, so gold has come under pressure the last few days. We're back right now to the 1785 level. I've been talking about 1760. That is going to be pretty substantial support. Extreme support right now at 1748. And I suspect we get a couple of weeks sideways. You can see the algos suggest we have a little more bias that the 10-period moving average, or the 10-week average, is going to keep going up, 1720 right now, and that value is going up about $11 per week, and it looks like it might even accelerate a little bit. So all of a sudden, we're going to go from 1720, and it's going to get us up to that 1740 support level. So that's exactly what's set up here. Stability on the 40, the 21 is still got an upward bias. We're in trend mode. And so all this should really just, I hate to use this word, just stay in a sideways range. All right, so here we go. Setting here at 1750, we're printing just below. This is the weekly chart again, and this is interesting because, as I've been talking about, the algos are still saying that this is the final week before we start a pretty decent decline over the next couple of weeks. So I'm thinking that we're going to find out a lot as we come into next week from what's going on with Bitcoin. So let's go to the daily chart, and then I'll come back on screen. I'll got a couple of things I want to discuss. So here we are. Looks like a few more. I've been talking about this. Still an upward slope here. We could trade as high as this 40, which is at 17,718. I went through a lot of scenarios from the standpoint of what might be happening here with the weekly, and even going into some monthly stuff. There's just a lot of overhead resistance, but we still have that 15,255, and that's that's major support. If we get below that, I've talked about it, probably 13,000, 10,000 would be probably the next stopping point. There's virtually nothing underneath this market. So it looks to me that next week is going to be a big, big week for everything. Now, I'm going to do something I normally don't do before I move on. And I'm only going to do one just because it's out there. I am going to look at Tesla, and I want to go on a weekly basis. So I'm not going to do a bunch of stocks. Don't ask me. This is it. I'll come back up. But Tesla, and I talked about this several weeks ago, we're trading right on the 200-day moving average. Algo suggests that we're going to, let me just see what we're getting to. Yeah, it's suggesting that we're going to trade back above the 10-period moving average. So we should hold in here. The next week and beyond should be pretty good. And the probabilities of getting above the 10,201 is pretty high. We're trading 179, and then that would set up a larger bottom. The PPM 2 and 3, the algos, what's happening is the moving averages are just rolling over, and that's just going to be a cap on the markets. But they're quite a bit. I mean, they're right now 246, 259. So over the weeks and months ahead, those numbers will probably be 220, 230. That will be where your resistance is. But it does look like there's a better and even chance that we're going to get back above that simple 10 at 201. So that's a $20 rally from here. You know, and every day, I don't know, every day, and let me go to another screen here, and then I'll come back up and I'll talk about this just a little bit. But every day, the top of the trading list here is actually Tesla. 958 million shares is traded. It's the top trader every day. So it's one of the very biggest trading stock out there in volume, and it's on the top of the list every day. I haven't seen a day for a while that anybody else was on top of the list. Maybe when Amazon rolled over originally, but Amazon's number 2, Apple 3. And, you know, one of the things that I just want to mention is I'm still working on the scenario. Hopefully my Starlink internet treats me well when I'm off grid in a couple of weeks, and I'll be able to communicate and have a fun time hanging out and working on this project. But I think what we're likely to see is that a lot of these big cap stocks, the Apples of the world, I mean, what are they doing right now? I read a story, and you folks may probably follow the stock way closer than I do, but you know, they're trying to get out of China, stop production in China. No matter where they go, it's going to cost them more to make whatever they make, whether it's, you know, Macs or iPhones or whatever, and it's just going to cost more. So, you know, the joke is, are we going to pay $2,000 for an iPhone so Apple can make the same margins, or is it going to be $1,200, $1,500, $1,700? You know, but regardless of what goes on, I think a lot of these big companies, the FANGs, that they've had a nice run, but they're not the players they used to be. And I think we're going to see a rotation into mid and small caps. I'm kind of getting a little more bullish, even though the patterns on the indexes aren't there. There are some things that I'm looking at that I think could be a substantial theme. So I think that's going to do it for tonight, folks. And I think I haven't looked at many of your comments, but yeah, so I'm just looking. Yeah, I didn't see our troll here. Let me get rid of this guy forever. See you, buddy. But yeah, so it's probably our buddy that, what's his name? They got Michael Action or whatever. It's probably got another handle. Anyway, all right, folks. Well, listen, I will see you tomorrow night. Those of you in the live room, see you at 1 o'clock tomorrow. Actually looking forward to it. I think after the last couple of days down, I'm seeing the futures are starting to fade off a little bit. We're back to 49, not a big deal, but we are seeing a little fading. But like I said, we should have an upward bias into the London Open and then some downside after that. We'll watch it closely. I would, I wish, who is this? Wish I had 1 million views too, just because, my goal is to help people. So, hey, share the videos, like the videos, comment, give me lots of comments. Even those of you that are a troll, that'll be it. So I'm okay with that. Like I said, I'm okay with anything that you don't agree with me with. The only thing I've ever that I typically, if you just start to get abusive and you call me names and call me stuff, then we'll see you later. You'll have to set up another handle till you get across again. So anyway, thanks for watching, everybody. It's been a great show. I said I wasn't going to go as long. I made the hour anyway. Always do. All right, folks. Talk to you soon. See you tomorrow night. Have a good day trading, everyone. You're probably right about the Tesla comment. Cover it every day. Make it the Tesla channel. Yeah, listen, I've been at 32,000 subscribers for a year. I don't gain any, I don't lose any. So something's going on, I know that. Anyway, keep watching. Love you guys back. See ya.